Hey traders, continuing on with this conversation that we've had this week with this whole exhaustion entries for day trades versus momentum entries for day trades. We're going to take a look at the S&P here today. Now, I'm going to go back and forth between two looks. And again, this is what I call comparing indicator sets of indicators that you've accumulated, purchased, created throughout the years, and knowing which is appropriate or what it's indicating that could set up a certain kind of trade. So I separate mine mostly into choppy sets, momentum sets, and exhaustion sets. So we'll talk about 2 out of 3 of those here today, which is the momentum versus the exhaustion. So as we were going into the clearing range, that's the first 30 minutes after the bell rings, I had a couple indications that we may see a little bit of movement, but I really wasn't too crazy about this because if I take a look at the NASDAQ did not have something similar. So if I'm going to trade the S&P in a certain direction, I really want to see the NASDAQ doing nearly identically, even sometimes leading what the S&P is showing me. So since I did not have either one of those things, a momentum type entry really wasn't in the cards. Now, I'm making this decision about this. Number one, I'm only looking for long entries. And if you've been following any of this content with me for the last month or so, you know that on June 10th, I basically said we're going to go to a long only book, long only day trading, long only overnight trading. So I'm not interested in the momentum. So that immediately shifts me over to my exhaustion set. Now, what's my exhaustion set? My exhaustion set is where I have a retracement that, again, I can buy into. And what are the tools for that? Reverting back to a mean, whether that be my V-score, whether that be a retracement to the Fibonacci zone of the clearing range. It could be a VWAP, all right? But I will not, and heck, it could be my hourly price movement range calculations, the historical volatility analysis that I created so that I can understand what the personality of the market is hour to hour. All right, so with that being said, if I'm only looking long, the freedom of that is I'm never sort of toggling between long, short, long, short. I've never done that in my career. I actually find the mental transmission of most traders does not do that well. And it's really going to, I find, prohibit you from ever being a monster, powerful trend follower, which to me, that's where success is, being able to grab onto those trends and hang on like a rodeo cowboy if need be. So what we have here is not just the breach, but then a retracement into this zone. And then we actually move down a little bit further. Now, let me show you why this move to the downside, this sort of second test of lows, was so interesting to me. So this is the first. Now, I'm basically, the line in the sand is where this happens, the 30-minute or the 60-minute, however you want to look at it. Let's go to the 30 first, okay? I don't want to make this too confusing, but let's talk about the 30 first. So I'm going to talk about a 30-minute high-low range. All right. So the first thing I want to do is take advantage of any kind of breach to the downside, preferably by 10:30. So for those of you that are wondering, Rog, what about the clearing? Are you not looking at that? Well, here's my breach, and I have to get my retreat by 10:30. It didn't happen. So I'm still on the sidelines, just to give you a better idea of the chronology of this trade. 10:30 a.m. Eastern, this first day of July, I'm still on the sidelines. All right. So then now I switch to the 60. So I've gone from a clearing range study to an initial balance range study. What's the difference? The first 30 minutes after the bell versus the high-low of the first 60 minutes after the bell, right? Not rocket science at all. So I get an initial balance breach. Now, why is this a big deal? This sets up really the remainder of the session for me. Once I have an initial balance breach, I will basically say if I'm going to do anything from 10:30 on, even from 11:30 on, it's going to be only long because I had this initial balance breach to the upside. All right. Okay, so yes, that opens the door up to this zone of support. But after the initial balance breach, our preference is going to be something closer to the volume weighted average price. So what I'm talking about is this area right in here, right there. That's the volume weighted price zone from the 3 time anchored VWAPs that I use. So I'm using volume, not just price, but I'm using volume. Even when I'm not momentum trading, and I talked a lot about volume and momentum trading, we use volume for exhaustion trading, confirmation of support as well. So that's exactly what I'm doing here. The other volume tool that I have is one that I created called the V-score, standard deviation of the volume weighted average price. I knew that between 9:30 and 10, the low that I saw was right there at the mean. So if I come back down to the mean, it's really tempting to be a buyer. That's really it. Am I going to get short? No. Am I willing to be a buyer as long as I'm trading above these HPMRs? Ideally, yes. Now, let me show you where this one was tricky. Because look, all my cards on the table. This one was a little trickier because the volatility was a little wilder than I would have liked to have seen. Or conversely, this clearing range and this initial balance range was a little narrower than I would have liked to have seen. Because what happened is we started pressuring the validity right in here. That's a problem. That's a problem. I'm not going to get short. I have the choice to be a little bit more persistent, arguably stubborn, and stick with my longs, but I'm not getting short. If Charlie Munger is right, and I think he is, Charlie Munger's always had a philosophy of don't look to do the smart thing necessarily, just don't do the dumb thing, okay? And I'm going to tell you straight up, the dumb thing in this market is shorting the bottom of the range. If anything else, what am I looking for? This is the clearing range low. What am I going to do? I'd rather be a buyer down here. I sure as heck don't want to be a short seller in this asset bubble. So not an easy day, but far, far easier if you're focused on the long side of the market. Okay? All right, so that's the breakdown from this morning. And in the premium video, we'll scan through some relative performance for the daily time frame, as well as a little bit more of a deep dive on these exhaustion versus momentum, what I do with the volume confirmed conviction dots and 10x candles. We'll talk more about that in the premium video. All right, gang, I'll see you in the next update.